Hello, class, and welcome to Module 3. Hopefully, you've completed your first little project last week where you did journal entries and come up with the balance sheet and income statement and statement of shareholder equity. So, this week we're going to start talking about inventory systems, and we're looking at Chapter 5 and 6. Basically, merchandisers have inventory, Walmart, Home Depot, grocery stores. Anyone that sells you merchandise is a merchandiser. And so they have what's going to be called sales revenue, and they have cost of goods sold. So if I buy a Snickers bar from someone for 75 cents and I sell it to you for $1.25, then my cost of goods sold is 75 cents and my revenue is $1.25. And so my profit obviously would be the difference between those two. Whenever you sell something or a store sells something, their computer systems are going to do two basic journal transactions. And if you go to Home Depot and you scan something, then their computer is going to do the following every single time you buy something. It's going to identify the revenue. So in this case with the Snickers bar, it was $1.25, and that's my revenue. And it's also the amount of cash that I'm going to increase my cash account by. In the real world, cash and debit cards and credit cards are essentially the same thing. So we recognize the sale for $1.25. We recognize the cash for $1.25. And we're going to have to move this item from inventory to a cost of goods sold. So the 75 cents, I no longer have that in my inventory, so I need to reduce my inventory by 75 cents. And then I need to increase my cost of goods sold because it's now an expense. So I have recorded cash of $1.25. I basically recorded a profit of 50 cents. I've reduced my inventory and I've increased my cost of goods sold. And that's done every single time you make a sell. Now, these chapters are going to cover inventory, different types of inventory systems. There's called first in, first out, and it's really just it's not the physical flow of goods, it's just the financial flow of goods. So first in, first out means that the first item you bought is going to be the first item you expense when you sell something. Last in, first out's the opposite. So the last item you bought, you're going to expense inventory at that cost, and then you have the average cost. So the two chapters that you're going to be looking at here, let's look at Module 3 Introduction. So use inventory systems and merchandise accounting methods to journalize merchandising accounts. Create merchandising financial statements. So again, we've really looked at just sales revenue or service revenue before. Now we're going to have sales revenue, we're going to have cost of goods sold, and that's going to give us what's called gross profit. And in the world of merchandisers, that's a big number. Walmart should be releasing their financials soon. They're the largest company in the world in terms of sales. And so they probably have somewhere around $670 billion in sales. $670 billion. That's a huge number. And so they record the sales and they record all the merchandise. And so there are ways that you will record the cost of merchandise. So anything that is related to the cost of merchandise, the actual product, the freight in is a part of merchandise, freight out is an expense. But you're going to record that. Then you also have a couple of different inventory systems. One's called perpetual, which means, again, you're using computer systems, so you update your inventory every time you make a sell. Periodic is different in that you do have to do inventory counts, and then that will determine what your cost of goods sold is and what your ending inventory amount is. Most people use perpetual. A company like Walmart, they can't wait around and do an inventory count every month. They have to use systems to do that. So create merchandising financial statements. You should be able to look at that and know the difference between a service and a merchandise or a manufacturer. Compare and contrast the different types of accounting for inventory. Now, what we have to do today is you rev- for this week is review the module resources, complete the problem set assignment, and then submit milestone one. Now, there are some very good resources this week, and let's go into the resources. We have chapter 1 and 2, or 5 and 6. Chapter 6 is inventory, first in, first out, last in, first out, weighted average cost method. Chapter 5 is going to cover the retail business and talk about some of the specifics. Here's the sales, cost of goods sold. These are the types of journal entries. Again, inventory is an asset. So when you increase that, you're going to be debiting. When you decrease it, you're going to be crediting. Some of the things that debit would, of course, be the actual um, purchase of the merchandise. If you return something, you're going to decrease your inventory. If you get an allowance, sales allowance, you're going to decrease your inventory. If you get again, merchandise in to get the inventory to your warehouse, that is going to be a cost as well. And so this is going to cover some more of the specifics. Let's look at the resources. There are a lot of good resources this week. Okay, there's the introduction of Module 3. There's inventory transactions. This one's a little long, but still, it will give you a pretty good overview. You've got first in, first out. That's about 6 minutes. LIFO, average cost inventory method. So all of these will give you a good idea. Will help reinforce what you learned from the text. So I would utilize these resources. It will help you understand the material much better. I've just given you kind of an overview. So you have your problem set again. Uh, this will be your third week, so by now you should be experienced with doing these. If you take your time, you should get all of the points. And then you have milestone one. And so when we look at milestone one, we're going to look at the guidelines and rubric. And I don't know if this will show up. Unfortunately, it won't download this, but if you look at milestone one, what you're going to do is this is sort of guidelines and rubric. Here you have milestone one walkthrough. It's a 14, almost 15-minute video. But I would recommend that you look at this. And what's going to happen is you're going to have a spreadsheet that you're going to fill in. And that is the goal. And you'll have to fill in 3 different tabs on the spreadsheet. You'll have a tab for general uh, general journal, and that tab is when you're going to make your journal entries. And then you'll have ledger accounts where you will total the balances of all the ledger accounts. And then you will have a trial balance. So you're going to fill in those 3, which will be the green tabs. So you'll download the Excel spreadsheet, and then you'll also download the accounting data appendix. And that's going to give you all of the journal entries and tell you what accounts, well, basically, it'll just give you the whole month's transactions, and you'll just complete this, and that will update the other 2 tabs. But I would recommend you just look at milestone one walkthrough, and that should give you a pretty good idea of what is required and how to do the problem. So after that, they've also asked you to make a comment as far as how did it go. So it's a survey, and if you take a survey, you can provide valuable input and help future students down the line. And if there's something that was particularly good or bad, then comment on it, let them know, and so that will help students in the future. So again, this week you have your problem set. You have your milestone 1. There are plenty of video instructions for both of those. So I would read the chapters, and if you feel like you have a pretty good understanding, maybe you don't need the videos, and then I would go to the milestone after doing the problem. I would watch that because that'll give you guidance as far as doing this project. And again, this is milestone 1, so you need to get the first part correct because that's going to feed the later parts of it. And if you get the first part correct, you won't have to go back and revise it because the end result is you need to come up with the correct information. Okay, so that should be really milestone 3. I haven't gone into as much detail because there really are good videos available, and I would just be repeating what you already have available. So good luck.